Welcome to The Prescription, the Tax Policy Center's biweekly webcast on fiscal policy for the COVID-19 economy. This is one of a series of conversations with state, local, and federal government officials, as well as leading economists and other experts. I'm your host, Howard Gleckman, a senior fellow at TPC and editor of our blog, TaxVox. Our guest today is Nina Olson. She's the executive director of the nonprofit Center for Taxpayer Rights, which works to further taxpayer rights in the US and internationally. Before joining the center, she was National Taxpayer Advocate at the IRS from 2001 to 2019. Before we begin, our usual bit of housekeeping. We encourage audience members to submit questions in the Q&A box at the bottom of your screen. The event's being recorded and will be posted online at TPC's website in the near future. We're using captioning, which you can adjust or turn off by using the live transcript button at the bottom of your Zoom screen. If you'd like to join the conversation on social media, please use the hashtag #LiveAtUrban. And if you'd like to suggest a future guest for The Prescription, just email us at info@taxpolicycenter.org. Nina Olson, welcome to The Prescription.
Thank you. Hi.
It's great to see you again.
And thank you for having me.
And welcome to everyone on what used to be Tax Day, and what's, I guess, becoming a trend. We have a month to go before this year's filing deadline. But Nina, let me start by asking you, from your perspective, how's the agency doing with filing season this year?
Oh, I think it's having a very difficult time. I am very concerned about the returns from last year that are stalled in the system, not just the paper returns that haven't been processed, but the returns that are stalled because of identity theft or waiting for information from taxpayers who have to mail it in, and that's just more mail that needs to be processed. The corporate paper returns, just all sorts of documents. And then you start a filing season with that kind of backlog, with the demands on the IRS for the economic impact payments going on. And it's done that, that's the kind of thing it does really well. What it's not talking about is the level of service on the phones. You hear from taxpayers and congressional offices all the time, but my understanding is that there have been days where if you calculate it by looking at the number of calls that were answered and divided by the number of calls that came in, the level of service was 2 to 3%. And even the IRS's own calculation, where it does like the number of calls that are answered divided by the number of calls that aren't routed automatically to automated things, it's at 15%. And that's, you can't, with all the attention on enforcement, you can't have that level of customer service and think that in any way you're having a successful filing season.
Well, I want to get you back to the phones a little bit later. And I have to tell you, my own experience was that I filed an electronic return with direct deposit on May 1st of last year. And I didn't get my refund until December 31st. And I called and never once even got anybody to answer the phone. Never got the phone answered. And of course, they have no system for leaving a message. So it was just impossible.
Right. And the thing is that the IRS is, if there's a refund, then, the return goes through all sorts of filters. And there's any point along the system that a return can get stopped and moved for somebody to look at. And of course, with COVID, normally that's a problem. Normally, there's not sufficient staff to get to those issues quickly and get the return on its way. Or to answer, the same people who are sort of working on that are maybe the same people who are answering the phones, who are processing the correspondence. You're just robbing Peter to pay Paul here. And again, I think COVID just so exacerbated that. And that was also, COVID came after a shutdown, the year before that impacted the filing season the year before and meant the IRS had to dig out of stuff the year before. So it never really, in my opinion, ever dug out from the shutdown. Just as it's sort of peeking its head up, COVID hits.
So let's try to unpack some of this. So this week, actually, in testimony before the Senate Finance Committee, Commissioner Reddicks acknowledged the agency is still processing about 1.7 million 2019 returns. And said it would be summer before they'd finish. Now, as you said, they obviously had the mail problems, the staff was out, all of that because of COVID. But is there more to this problem? I mean, why 1.7 million returns from 2019.
And that's just individual paper returns. And that doesn't count like the return that you're describing, which was a 2019 return held up for some reason. And there are many more of those. And then there are the corporate returns and the non-income tax returns that are in that process. And some people have estimated 30 million of those things are wandering around. So some of that was like, you know, saying the good news was it's down from 7 million individual 2019 returns. And that is good news. And I don't doubt the commissioner saying they're doing everything that they can, and they're, you know, they're putting people on weekends and 2 shifts and things. But, you know, this is one of the fallouts that I have a concern about when we talk about enforcement, you know, and we've had at that hearing, you know, the commissioner did a jaw-dropping, you know, $1 trillion tax gap. And I thought, where did that number come from? I mean, yes, I can understand cryptocurrency, and yes, I can understand the recent research about offshore, but that still doesn't, you know, add up to 1 trillion. And as well, if you're going to start calculating illegal source income, like, good guess on that, folks. You know, like, what is that? Where do you get those? How do you do any kind of estimation on, you know, narcotics in, you know, okay, never mind. But the point is, focusing on that, you don't focus on the downstream consequences of those initiatives. And you don't make the case for more human beings to pick up the phone, to process returns, to resolve things in error resolution. There was one thing that was really funny in the hearing was several of the members of Congress asked the commissioner about the Kansas City Service Center and the error resolution, you know, unit there. And I thought, in 20 years of being, you know, just, I've never heard anybody reference ERRS, error resolution. And now it's become like everybody knows about this unit, which should be a sign of how bad it actually is right now that they know about it.
So you have over the years urged the agency to upgrade its use of artificial intelligence, for example. It could catch sophisticated tax cheats, but it also could avoid long processing delays for obvious mistakes like a transposed birth date or a wrong digit in reported income. Do you think the IRS is making any progress in this area at all?
I'm sure that they're making progress in the area, again, on enforcement and certainly on the criminal investigation side, and probably, you know, now that SBSE has really become the whole enforcement component of the agency. What I don't see, again, is this positive use of it. And I have been spending a lot of time thinking about artificial intelligence and talking to a lot of people around the world, you know, and just this morning was on a webinar with listening to someone from Australia tax office where they were really talking about data. And one of their big points was, you know, big data is not the thing. It's that you've got to have the right data that's fit for purpose. And another thing that came out that I was seeing about artificial intelligence and the IRS, you know, there's a difference between really doing artificial intelligence and using computers to do rule-based systems. And the dependent database in many ways is a rule-based system. This is the system where every refund return goes through. And if you break a rule, you know, you get stopped. So somebody looks at it and says, we're going to audit it, or we're going to ask for it, or not, we're going to move you on. But that's not an artificial intelligence system, you know, where if you've actually worked a case and you get a different result, you feed that result in automatically into the system. So the system learns. It's more taking a rule that you made up and you're applying it with a machine faster against a set of cases. And that also led me to thinking about the Taxpayer Advocate Service. I mean, if there is one place in the IRS that has a mother lode of data, namely its cases. You know, when I left, there were over 4 million cases between 2001 when I came in and 2019 when I left. You know, for example, a lot of them are earned income credit cases. Why aren't those cases where we were getting, you know, like a 65% relief rate, let's say? Why weren't those cases and the characteristics of those cases fed back into the system so that you revised the rule, you know, you actually learned? And that's an artificial intelligence system that you're learning from the data itself is telling you what has evolved, what to look for, et cetera. And I don't see that. I don't see that in the IRS. And I'd love to know if they're doing that.
So Nina, is it a matter of willingness or is it a matter of money? Or both?
I think it's probably both. I think that there's so much work on the IRS's plate that when you say, let's reimagine how you could do these things, really reimagine, it's hard for them, and then at the other hand, to bring in the people from outside that you need to help them reimagine and to train people in-house to be able to think about these things while you're running. I think it was Charles Rosati that talked about, you're renovating the foundations of a house and a whole house while you're living in it. Well, I actually did a kitchen renovation while I was living in my house, and I can tell you it's not fun. But it's just, that's the pressure on the IRS.
So we started to talk a little bit about the IRS doing the job it's supposed to do. But over the past year, Congress has given an overburdened IRS even more to do. 3 rounds of economic impact payments, and now monthly or maybe quarterly child tax credit payments. Does the IRS have the capacity to do this additional work?
Well, there are 2 things. One is that things like the economic impact payment, which are a heavy lift, but they're also the exact kind of thing that the IRS does really well. It marshals its forces. It brings everybody around. It can make it happen. Where it doesn't do well is, and it does it well for 99.99% of the population. Where it doesn't do well is that 1% to 0.01%, part of the population, which is tricky. And in the past, it's just sort of said, well, we're doing well for everybody else. And I think it really got caught up in that in the economic impact payments, where it shoveled lots of money out the door quickly, and it didn't do the planning like, well, now we also have to allow for all of these other little cases that aren't getting it because this is so disastrous, this COVID. And it didn't really allow for what happens if COVID evolves, what happens if, it's not a good answer to say, wait until next year's filing season to get your payment. You may, you won't make it to next year's filing season. And it doesn't do well with that kind of thinking. And that goes to, the thing that I've been saying since, I don't know, 2006, 2007, is that it really needs to recognize that it has 2 missions, that it has 2 lines of business, that it's both, the revenue collector for the federal government, but it's also a benefits administrator. And they require different skills. They require different ways of thinking about your population. It requires, different employee skill sets, and it requires different measures, performance measures, and declarations of success. And I maintain that until the IRS actually puts it in its mission statement and then starts designing its budgets in that way, and is measured in that way. And so TIGTA and GAO come back in and don't just say, bad you, IRS, for issuing these improper payments. It's like, IRS, what are you doing to make it the burden easier on these people? What are you doing to identify the people that aren't claiming the credits and should? Those sorts of things, where it's held to a different set of standards for these kinds of programs. It will always be in that problem area of, not being responsive to the taxpayer population that it serves.
Let's step back one step here particularly about the child tax credits.
Yeah.
There are some who have argued that the IRS shouldn't even be the agency distributing these, that it would make much more sense if Social Security Administration did it, because after all, it's kind of in the business of sending out monthly checks to people. What do you think about that? Who should be, assuming this is made permanent, who should be doing this?
For a long time, I thought, well, let's try to think about the IRS not doing it. Now we're actually working, we're going to be doing a series of workshops on really trying to reimagine exactly this issue. But I come down to, the IRS, as I said, has a mother lode of data. Social Security knows where that the child was born. Social Security does not know where the child lives unless it's one of the few children that are actually receiving benefits from Social Security. Social Security gets the W-2s, so it knows current year income, but the IRS gets W-2s. And then the IRS gets all the 1099s, it gets the K-1s, it gets every other piece of financial data. So unless you want to design a massive data flow out of the IRS into Social Security, security, which you could design. I mean, but that's going against a whole bunch of stuff. You're really looking at the agency. The IRS is the agency that has the most current data, but it's still a year old, and that's, or at least several months old by the time you're administering advanced payments. And so that's where, I've been trying to think about what other data sources are there that you can get that can update that information. That's the concept of the portal, where people can come in and update their information. And it's also where you can look at definitions. So again, we have the uniform definition of a qualifying child. There have been many proposals, including my own and your organizations, about how to reform that definition. So are there ways to take things that are determined non-compliant today and definitionally say, well, they're no longer non-compliant. They're no longer not the right answer. We're making them eligible by changing the definition. Is that something we need to do? And I think that's the kind of work that needs to be done so that the IRS could do a better job administering it, and then have the right data on hand to identify the people who are eligible and maybe not claiming it. And then that goes to, okay, your next step is, can you make automated payments out, as well?
So you had a lot of experience when you were taxpayer advocate with the EITC claimants. Commissioner Reddick talked the other day about this portal and how we hope to have this portal going on July 1st. I worry a lot about whether the kinds of families that are going to claim the child tax credit have access to broadband, are going to figure this portal out. Is this thing going to work?
Well, we learned about this through the EIP with the non-filer portal, right? There was no thing for people who didn't have access, as you say, to broadband. And TAS did a research study several years ago that showed 41 million taxpayers. And those were actual taxpayers who had filed a return in the last 2 years, 41 million didn't have broadband in their home, and 14 million didn't have any internet access in their home. I mean, those are stunning numbers. And, with the EIP, the non-filer portal, people who were disabled and didn't have their support systems around them couldn't use it. It wasn't mobile friendly. It wasn't, it was real challenge. Paper is an alternative, but that's just digging the IRS further back into paper. Before 2005, and this is something I proposed, the IRS had a program called Telefile, and it was for the simplest returns. So basically the returns equivalent to the non-filer portal, where you could just enter in information on your keypad, through just hitting your keypad, and it came in electronically. And so it just seems to me that creating a telephone app would really, help that part of the population that doesn't have broadband. They do have phones. We know they have smartphones, some kind of phone they have, and they could do that.
So you think that this portal could be made functional with just a phone without having to use a?
Well, I don't know about that. They're being so cagey about and I use that not in a, it's just like they're not giving us information about what this portal is supposed to do. Senator Cortez Masto, for example, asked a question of the commissioner because she's been working on domestic violence survivors, and I've been working with her and her staff and several others, Jamie Raskin's staff and Congresswoman Moore's staff, on the EIPs and rebate recovery for victims of survivors of domestic violence, where the abuser has claimed and received the EIP. And she asked, we've got a change of circumstances thing. Can a survivor, domestic violence survivor, go in and say, I'm no longer living with this person. I'm now head of household and the children are with me. Don't pay this out to the abuser who shows up on the 2020 or 2019 return. And the commissioner's answer was one word: no. And you're like, well, what is this portal supposed to do? Yeah. So we don't know.
Yeah. So let's go back to the phones for a second, because this has been an issue for you for a long time, and now suddenly I'm very interested in it too. So, if ever there was a time when it was important to have a good phone system, it was the pandemic. The IRS offices were closed, the walk-in centers were closed, the VITA sites were closed for months. yet the phone service seemed worse than ever. You know,
Yeah.
you get these endless phone trees that end up in hangups.
Yeah.
There's no way to leave a message for a callback, which almost any private business does now. Even tax professionals are complaining they couldn't get through. So what's the problem? Why can't the IRS improve telephone assistance?
Well, I think some of it is technology, the callback feature and several of the other features. And I know the IRS has been wanting to do that for years and years and years. So it's not like they don't recognize that. There's a consensus. And my understanding is it's funded. It requires an upgrade to the system. It's not like you just take that off the shelf software, because the system that was new in 2000, is dated today on the phone. They actually have been trying to improve the system. But the answer is just more human beings. The IRS gets, used to get on average like 100 million calls a year. And the commissioner has said it's just blown out of the water this year. So that's just math. Divide the number of calls by the number of bodies you have, by the number of minutes in a day. You need more bodies. And apparently they're going to be able to hire, I think he said 1,000 more call assisters, but that's not going to do it. And again, you've got to really think about your contract with the taxpayer. If you're asking them to file voluntarily and report their income correctly, you're going to have to pick up the phone. And I know they want to shove people to online, but again, very few people can pass the authentication test online. And here's a downstream consequence of the backup in the return filing. Like, to e-file this year, you have to have the AGI, the adjusted gross income, for your 2019 return. Well, if it's not in the IRS system, you can't e-file.
And Nina, I have to tell you, this happened to me yesterday. Exactly that problem. Whatever AGI they have for me is not the AGI on the return that I filed. And when I tried to go on the IRS website to find out what AGI they have for me, they kicked me off because for some reason they couldn't verify my cell phone number.
Right.
So I went to the post office and I added to the paper and I put it in the mail.
Well, this is the authentication issue. And so that's the other question about that portal, and the population. It's like, is the advanced child tax credit portal going to have the same authentication as the online account? Where, then these people who don't have car loans, auto, mortgages, lines of credit, and have pay-as-you-go cell phones aren't going to get through.
So let's, I want to go back to another issue that you talked about, which was this tax gap issue. So as you said, Commissioner Reddicks threw out this really eye-popping number, $1 trillion a year. So this sounded to me like a man who's just trying to get his budget increased. But I mean, how big a problem is this really?
Well, I mean, I think there's several things. And I've looked at a lot of the press about that statement, as well as watching the members of the Senate pick it up immediately.
Right.
First of all, the recent research study that came out, gives a number for offshore, underreporting. And clearly we have to do work on cryptocurrency and what is underreporting. And, there are other things. So you can quantify that. But as I've said to people, equating the entire tax gap as tax evasion is just so disingenuous. And it's also wrong. It's incorrect. Evasion has a technical meaning, under the law. And generally it requires mens rea, a criminal intent, an intent. So much of it is error, so much of it is inadvertent. So much of it is, some of it is facilitated by third parties, preparers, promoters, et cetera. There's a whole bunch of different types of non-compliance. And if you say, $100 trillion and it's tax evasion, and that's what the Washington Post called it. That's what the New York Times called it, $100 trillion in tax evasion. And that creates distrust of the taxpayers and the tax agency. Why am I paying if you're letting all these people off? Look, if you explained it in different ways, Some of it is non-payment. People cannot pay. And by the way, that non-payment section is going to be larger after COVID, and are you going to say that people who lost their jobs are tax evaders, because they can't pay their taxes and still pay their basic living expenses? We need a much more nuanced conversation about that. And then, of course, we need to actually nail down that $1 trillion number, because it's like, whoa.
Yeah, for sure. So there's also, of course, this intense debate over what kind of return on investment the IRS could get from enforcement.
Yeah.
So Larry Summers and Natasha Sarin, who's now at Treasury, say that, strong enforcement, especially focused on high income taxpayers, the IRS could collect $100 billion a year or more. Former Commissioner Reddicks says it could be more than that, maybe 1.6 trillion over 10 years. Summers and Sarin estimate a return of roughly 10 to 1. CBO says that's wildly optimistic. Who's closer to right here? What kind of a return could the IRS really expect?
Well, first of all, you're looking at return on investment of enforcement, and enforcement dollars are only about 2% of the entire 3 whatever trillion dollars is the IRS brings in. The direct result of an enforcement activity is only 2%. So the 98% is attributable to something else. And that something else certainly can be the indirect result of the IRS doing audits or collecting dollars, and people get word of that, or they just there's lots of research that people grossly overestimate the audit rate and think that they're more exposed than they actually are. And that's a good thing, I guess, But some part of that is, customer service and ease of complying with the law and automated things. And also, let's not forget, employers willingly and voluntarily paying the withholding in for their employees. Without that, we would have no tax system, and we would have a real major tax gap. So you've got to really think about, how do you measure the overall return on investment, and give some credit to customer service. And then the direct return on investment, I really don't know. When you get up higher, when you get to the dollars, like we are now, the 16% of the dollars, if you have an 84% compliance rate, right? Then those are harder dollars. Every single dollar at the margin is harder to get. And the return on, the cost of getting that dollar is more difficult and greater for each of those dollars at the margin. So if you just say, here's all the dollars and here's all the cost, and it's 10 to 1, no, it's much harder to get that. And I'm not an economist and I don't have models, but I'm just looking at it from a former tax administrator and someone who also represented a lot of human beings before the IRS and know how taxpayers think.
So we have just a couple more minutes. I want to ask you two other things if we can. One of them is free file. So this was supposed to be a model of a public-private partnership that would make it free and easy for low-income people to file with simple returns to file. Didn't work out quite the way people hoped. Is the new and improved free file going to work? Is this a useful tool for people?
Well, free file does its taxpayers have talked with their feet on free file. They don't use it for as many years as it has. This year it was used, it has high numbers because the portal, the non-filer portal was there and the IRS was directing everybody to it. I think that the way to go with electronic filing, free electronic filing, is to just create a simplified, expedited filing portal, is something that Mark Mazur called it. A simplified filing portal for the simplest of returns, and and then making data accessible to taxpayers, their own wage data, et cetera, that they can download either into that program or they can download it into their own software, or their preparers can download it into it. And then just create a PDF, a return like free fillable forms where people at higher incomes can use it if they're so inclined, and just get rid of this consortium that's confusing to taxpayers, constantly has issues. Are you in the system that is fit for you? And then you find out it's not, and you have to buy part of a product or else you just back out and you've done all this work anyway. It just makes no sense to me. It's not a sustainable thing and people don't use it. So why do we have it? We should invest on a simplified filing portal that anybody with, maybe 30 million taxpayers can use easily, and then just create the free fillable forms and just have them as the product that's available.
Great. Well, Nina, we are out of time. It's been great to talk to you. It's been great to spend part of what used to be tax day with you. So thank you for joining us. We hope to see you again soon. And thank you to the audience. Take care, everybody.
For having me. It was great fun.
Thank you.